I want to bring in Scott Bauer. He's the CEO of Prosper Training Academy to help us take a look at these better than expected numbers. Scott, welcome. Stephanie and I were just talking about how this is going to provide us a little bit of an insight in terms of consumers, their spending habits, economic conditions here in the U.S. Similar to what we've been seeing as far as some of the economic data coming our way, it looks like things could be worse.
No doubt about it. And that's a blowout number. But you know what? Just like with the jobs number that we got, I think we have to have a bit of caution on it. Wonderful number. It's actually better, a bigger rise than what we saw a decline in April. And I will tell you, Ben, and you may have experienced the same thing. I was out shopping a little bit last week as things have opened up a little bit, and people are just absolutely just they got to be out there right now.
Yeah.
Pent up demand, exactly. So it's fantastic. Let's hope it sticks like this, but I don't want to get ourselves, a little too far ahead of what we're seeing here. But no doubt about it, great number.
Yeah, let's not put the cart before the horse. I like what you're saying there, Scott. I mean, I guess what could potentially derail some of this optimism that we're seeing? It's not jobs. We've been hearing about historic job loss. We've been hearing about, again, some of the numbers that are better than expected. Potential for an increased cases, though, has some concern right now. I guess the question is, again, what could derail this if we're seeing better than expected economic data? Is it an increase in cases that could kind of slow some of those trends that we've been seeing as far as some of the numbers?
No doubt about it. I mean, that to me is really the only thing that's going to derail this, and let's hope it doesn't happen at all.
Right.
People stay vigilant, and we can get back out there because, like you said, Ben, the pent-up demand to be out there, whether you're shopping at your grocery store or a car dealer or some other retail, and you want to go buy clothes, whatever it is, the pent-up demand is like nothing we have ever seen before.
All right, let's talk about market reaction 2 here. Kind of limited in terms of the dollar. I mentioned the indices into new highs. They were already bid. I've got treasuries hanging out near lows for the overnight session. Scott, I mean, is this the kind of thing that could provide the catalyst, or is this just one more piece of the puzzle to kind of provide the bigger picture as far as, I mean, we've got rates which have still been very much range bound. We've got the dollar which has been coming off, but still nothing major in terms of real price decay there. What does this mean ultimately for markets?
It like you said, it is definitely one piece of the puzzle. I think any data point that we get now, whether it's jobs number, retail sales, ISM, whatever we see has to be taken with a grain of salt as one piece of the puzzle. Now, the more and more that builds up, the better and better that's going to be. But to look at one number and get too optimistic, or quite frankly, on the other side, too pessimistic, is a recipe for disaster in my book.
Oh, as you were saying, in terms of putting the cart before the horse here earlier, let's talk a little bit about Fed Chair Jerome Powell today, what you'll be listening for, and expectations. I think he's testifying to the Senate today and the House tomorrow.
I mean, he's set the expectations out there, and I can't see anything being off course of what he has set out there, that the Fed is in no way, shape, or form looking to raise rates. The announcement they made yesterday about buying corporate bonds, I know, has been met with some optimism, a lot of skepticism as well. But I don't see him straying outside of what he has said, and, that kind of timeline of the Fed not looking to raise rates until at least 2022. How many times is that going to be mentioned today? I'll take the over on a dozen.
Scott, it's not just some of the measures on behalf of the Fed in terms of corporate bond buying. Also, we're hearing about this $1 trillion Trump package right now. President Trump expected to talk about this a little bit more, some details later on in the week, I think on Thursday. But ultimately, I mean, this has provided the stimulus that we're seeing. And I guess the real question here, there are some legitimate concerns about how are we going to pay for all this.
No doubt about it. And I just hope people don't politicize it, because the bottom line is, when you look at the economics of it, how are we going to pay for it? We're already in, massive record-setting debt right now. And, frankly, it's a great plan, right? We need the infrastructure. However, how can we afford it? So, at some point there's got to be that trade-off.
Okay, Scott, kind of a light week in terms of economic data. I guess my question, what are you looking at here in terms of a potential next catalyst for rates? Because we were just talking, and we actually pulled up the dollar chart there for a minute as well, and I noticed if you look at the dollar, if you look at rates, for the most part, in the middle of a wide range that we've seen related to the March volatility, what's going to be the next catalyst to break us out of it? I was just talking to Ed Moy earlier from Valorium, and he said, he said that it could potentially, or he's looking at some inflation concerns that might be out there. Is that a potential catalyst if we start to see rampant inflation?
I mean, I think that's down the road. I think it's a valid point, but I can't see us really being, let's call it, concerned about inflation
on the short term.
At least through 2020, and well into 2021. So, what can derail here? Well, I think that what happens with the pandemic is going to set the tone for the entire marketplace. If we shut down again, that's going to affect rates, that's going to affect the dollar, that's going to affect everything we're looking at. I just don't see anything else in the bigger picture right now that has the potential to drive equities and, the debt markets at the same time as what happens with the reopening and the pandemic.
All right, definitely gives us a lot to watch here as far as the numbers, as far as coronavirus numbers, market reaction to some of this economic data that's been playing out. And again, Scott, a great breakdown as far as the better than expected retail sales numbers coming out and a good look at the dollar financial markets reaction to. Scott Bauer, always appreciate you joining us here on the Future Show here on the TD Ameritrade Network. Trader Scott Bauer is the CEO of Prosper Trading Academy. You can check him out there.